Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, key support level on S&P for short-term trading and long-term trading. Any questions you might have about your subscription and how to take advantage of the current market volatility. Risk management. I spend a lot of time talking about trading psychology and risk management and what are the key concepts in risk management. For those of you who are new, welcome. This is my brief bio. If you haven't been in any of the live broadcasts, do me a favor. If this is your first broadcast or first live webinar, just type in first. Always want to welcome new subscribers. My background is artificial intelligence, right? Very popular theme. You know, there are interesting stats from today that the market would have been down 5% if it wasn't for artificial intelligence, theme that everybody's buying into. So I don't know how they derive that stats, but okay. We have master's degree, specialized in artificial intelligence. We have a lot of models built on machine learning, neural networks, similar approach to what you hear on the news. I was a CTO of several publicly traded company and started Tradespoon over 10 years ago. So we want to say thank you to everybody. Because of you, I'm able actually to enjoy what I'm doing professionally, managing, trading my own money, building software, models, artificial intelligence, and mentoring subscribers how to trade stock and options. Disclosures are important. I'm going to go through specific live trade examples. So it's very important to look at the disclosures. Trading stock and options involve risk. If you're new to trading stock and options, I encourage you to visit the link on your screen so you understand the risk associated with trading stock and options. I'm not a financial advisor. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decision. All right, before we jump into a trading plan, let's talk about current market conditions, key support level, and what to expect. So looking at let's zoom out, what have been happening. I mean, for the past probably 5 weeks, right? Starting at the beginning of April, we've been trading in this range. Let's see how far does it go back to. It goes back to, yeah, beginning of April. So it's been basically 6 weeks that we've been trading in this range, 404 to 418. 418 significance is that this is year-to-date high. So we are trading very close to year-to-date high, again, on this notion that artificial intelligence will improve our life significantly and will build efficiency, improve the margins, and stocks like Google, Meta, Apple, Microsoft, NVIDIA are all approaching their August highs. August highs, or some of them actually a little bit higher than August highs. So 418 is the overhead resistance. Support is 404. Very important level. We've seen it in the past 2 years when the market is fighting for the 400 level, important psychological level, and also, you know, from technical perspective, and it's also 50-day moving average. So on one side, right, we have this artificial intelligence theme that everybody's buying into. It's, you know, people are comparing it to 2000, end of 1999, 2000, the internet, boom and bust. Right? The idea that internet changed our lives, and it did. But a lot of companies were selling T-shirts with printed labels, and there were billion-dollar evaluations. So the question is, how much higher can the market go, and can we break out to the upside, right? Scenario number one. So if you believe that artificial intelligence is going to change our life, and without mega cap technology companies, market cannot break down, cannot pull back, right? And inflation, everybody's using the words deflation, now they're using the word stagflation, but inflation is subsiding. I mean, it is obviously higher than everybody wants it or expects it, but it's in downward slope and it's continue going lower. And employment is still, everybody's employed. Everybody who wants a job has a job, right? So, and people are spending money and traveling. So that's scenario number one, right? Scenario number one, we're going higher. Scenario number two, right? At some point, we're going to break to the downside. I mean, we do have scenario three. A lot of people, like on yesterday's webinar, said scenario three. But I mean, it's been like this for 6 weeks. I mean, I guess it could be there. We could have the same price action for the next 6 weeks, where we trade in, 1% up, 1% down every day. But highly unlikely, right? Especially when you go into summer, liquidity dries out, people going on vacation. So it's just a matter of time. I mean, maybe another week, maybe another 3 weeks, but at some point we're going to break out, right? Something's going to happen in the market, so we're going to have scenario number one or scenario number two. So that's a very important question. The question is, why is this important? First of all, this positive and negative visualization, right? If you're bullish, you want one. Excuse me. Right, you want one, but you should at least consider two so you can determine the position size, right? Because you don't know what is going to happen in 6 weeks. You don't know if you're going to have one or two, right? We can speculate, we can argue, we can debate, but we don't know. So you have this negative visualization. I encourage you to do it on a daily basis when you trade. Time frame could be different, right? Maybe you're a day trader and you only care about first hour of the trading session, or maybe you're a swing trader, you only care for the next few weeks, right? Or maybe you're a momentum trader, you think about the next couple of quarters. But this exercise is important for the time frame that you're trading. I encourage you to do that. Write it down in a journal, what you decide, and that helps you with determining position size, right? How many shares do you buy? Because if you believe in one, you should consider two. And if two happens, how much money are you willing to invest? And vice versa. If you think scenario two is going to happen, and you're bearish on the market, but Apple and Google continue to trade higher, then the scenario one is going to happen, right? So scenario one, scenario two. Let's see if we can find the consensus. So how many of you say one, right? We are, living in an exciting age of artificial intelligence and computers will take over the world. So then you would say one. Or if you think unemployment is low, and as long as unemployment is low, market will not pull back and we're trading in the bull market. Or you basically say scenario number two. Scott, two. Okay, thank you. Anyone else? Sylvester, T. Mark, JGW, J McCodd, Bravos, Arn, Virus, Prasad, Patrick, Ku, Kevin, Jerry, Jack, Irene, Don, Andre. Irene, one or two? I know you've been in the webinars before. All right, Don, two. Jack, middle. Okay, I mean, three, middle. I guess it could happen for the next 6 weeks, but eventually we're going to break up to the downside or to the upside. But if you're range bound trading and you just kind of like day trading in this range, I mean, you probably maybe don't even care at what point it will break out. If you go to buy the chart, we are in the range 400 to 420. Right. To Irene, to the downside. Yes, so we are trading in the range, and if you're day trader, I guess you don't care, right? If you're a day trader, I mean, I guess it's a good point, right? You basically say, Vlad, I don't care which way we're gonna break out, right? I'm a day trader, right? It's trading at 418. Every time we approach in 418, I sell. then I make money every time it's at 404. I buy and I make money, and this will continue for the next 6 weeks. When it does break out, whether 1 or 2, I have my clearly defined stop levels. Thank you for identifying. If we're above 418, 420, I'm out. If we're below 404, 400, I'm out, which is all totally fine. Most of you said 2. I don't think anybody said 1. Probably been influenced by my webinars and forums. So to answer, yes, I think 2, right? I'm surprised that we've been trading in this range for 6 weeks. You don't see that very often. You can't really model that behavior in the market where we're trading in such a tight range. But we're in the middle of the May. Earnings are out. We just came out with the market, retail sentiment, inflation expectation. The numbers don't look that good. We've had CPI data, we had PPI data. It looks better than expected, but still higher than everybody wants it. So for that reason, I do think we're going to break to the downside, right? And if you zoom out, not just 1 hour chart, but look at the 1 week chart, right? Where each candlestick on this chart is 1 week, right? Let's zoom out, make sure everybody can see it. Okay, that should be a little bit better in terms of. So this is each candlestick. You can see in the past, I would say 6 weeks, we didn't really go anywhere, right? We did break above the downtrend, but market is kind of rolling over. So probably not going to happen for too many weeks more. And the pullback should start. Obviously, we talked about 404. That's a 50-day moving average, been retested in the past 2 weeks, 3 weeks, twice. Below 404 level, if we do break below this downtrend line, that will open the door to 380. I mean, first 200-day moving average, which is around 390, and then 380. Why? So what are some of the other reasons or things to watch out for? So first of all, I would look for 10-year yield, right? The chart of 10-year yield. Again, just a reminder, each candlestick here is 1 week. We are sitting on the edge, right? Again, 6, 8 weeks, 9 weeks. We have interest rates didn't go anywhere, which is good. It's good when interest rates are stable. This is a 5-year, so let's zoom out to 10-year. Very similar. And we're sitting at this key support around 3.3% on 10-year yield. I think we are trading in a recessionary environment, right? There was a survey yesterday, and all of Gallup survey, and the consensus is that there are less people worried about inflation right now, right? And it actually came out today in the consumer sentiment, right? Consumers are not worried about inflation. They're kind of used to it. They realize it's been here for 2 years. It's probably going to stay here for another, year to 2 years. Maybe not oil price, not your gas prices, but when it comes to rent, right? When it comes to the price of your vacation, the restaurant prices and stuff, that inflation's here to stay. But they're less concerned with high prices. They're more concerned about their jobs. They're more concerned about recession, right? And that's why you see, initial reaction market was, rolled over, right? We were up on spiders, maybe close to 0.5%, and now we're, the market internals continue to deteriorate. So I would keep an eye on interest rate, right? If interest rates break below 329 and treasury prices go up, that means the fear of recession is increasing, right? And you would have a steeper pullback in the market. As long as the interest rates are bound, range bound, right? And as long as dollar, let's look at the dollar, right? As long as the dollar is kind of at 52-week low, right, then this is market is not going anywhere. If you see dollar, right, we are trading on Friday, right, we are maybe 5-week high, right, 5-week high. If there is a follow through, let's say next week where we jump, let's say about 103 on the dollar, and the yield drops, right, if the next week yield drops below 3.3 level, that is your clue that most likely the equity market will follow, right? We're breaking key level in equity market, we're breaking key level in the currency market, and equity will follow to the downside. That's the sign, and usually it comes a little bit before the equity market reacts. So personally, I believe bond market is correct. I believe currency market is correct, right, when it comes to these signals. So that's more important to pay attention than, press conference by Google, that they are gonna, change the world, and, search engine is gonna, do some magic stuff. So that's very important. That is your sign. So I'm watching very carefully to rally in the dollar, kind of not rally, but to this short-term little bounce in the dollar, and see if there's a follow-through next week. And I'm watching pullback in interest rates, if there is a follow-through. Those are very important levels, and because I see them sitting in the key support, and I'm on the camp where if interest rates are high, right, this is the fastest pace of interest rates hiked in the history, right? And when you go from 0% to 5% in a very short period of times, something's going to break, right? There are skeletons in the closet, and the skeletons will come out. Whether it's PacWest, right, the next domino to fall, right? We don't know. Right, 10%. I mean, the outflow of the deposits was pretty, concerning this week. So everybody's concerned about PacWest and a few other regional banks. Everybody's concerned about, vacancy rate in the commercial real estate. Everybody's worried about refinancing debt, especially if, your balance sheet is weak. So it's just a matter of time. So I'm bearish for those reasons. Any questions so far? Okay, no questions. So how do we help you trade on Tradespoon? So let's see, elite service. So elite service is where you can participate in, you can see all my trades, right, in the trade log. And you can participate in the morning bell and closing bell, and get SMS messages. So let's review some of the latest trades. TLT, right? So TLT, I'm bullish on TLT, and I've been trading around this position, right? So we've seen that interest rates are stuck in the range. As long as they're in the range, when you see that, TLT is down around 103 level, I'm buying, right? And around 105, 106 level, I'm selling, and kind of rinse and repeat, right? Because you can look at the interest rate, right? And kind of said, well, for the past 8 weeks, it's sitting in the range. So, when interest rates go down, I buy interest rates, and when interest rates are 3.6, I sell interest rates. And TLT is just inverse of that relationship. So you can enter your SMS, you can enter your phone number, and every time I trade TLT, you should get an SMS message. Disney, I do have earnings strategy. I like to trade around earnings because it gives you extra volatility and extra premium in options, which usually mispriced, right? Usually mispriced because of the fear that Disney is going to have horrible earnings. In this case, Disney did have pretty bad earnings. At least the reaction to the earnings was one of the worst in the past 10 years, and it's down 10%, right, in a very short period of time. So in this example, this specific example, I just sold short stock, right, 93, bought it back at 92.1, looking for anywhere from 0.5% to 1% profit using underlying stock price. So this is day trading. Sometimes I do iron condors, right? I think this week was PayPal, I believe I did. Let's look at PayPal. So PayPal, right? Iron condor, instead of trading stock, I sell out of the money premium, right? I sold, in this specific example, I sold call spreads, collected 36 cents on the $88 stock. It's a little bit less than uh, 0.5%. So the idea is, especially in a tight volatility environment when VIX is at 15 and market doesn't move more than 1% up or down for the past 6 weeks, very hard to collect premium, right? So 0.5% to 1% premium is what I'm looking for on this short-term trading, and I believe in compounding investment, right? 0.5% a day or 1% a week, it compounds, right? If you can make consistently 1% even a week, that's 52% a year. So I believe in compounding investment. I believe you should treat trading as your business, right? Where you have your weekly goals, right? I have a weekly goal. If I can make 1% a week, I'm really happy, right? Consistently, right? It's not just like 1 week 1% up, next week 5% up, third week 10% down. That I don't like, the roller coaster. I like to be consistent, kind of expected drawdown in my portfolio, and always look at position size and number of positions, right? If you're new to trading, I propose not to have more than 4 positions and not to risk more than 2.5%, right? And we have, if you follow the service, you'll see it's not just, some trades are options, some trades are like stocks, right? LA Lilly, right? LA Lilly, well, I didn't trade it 7 days, but in the past 30 days, also traded a few times, right? So it's a combination of option stock trades. You have to make a decision what you're comfortable with, stock or option trades. I encourage you to consider both. It just depends on your journey, and options are more complicated, right? You have to think about time, you have to think about premium, volatility, delta, beta, so all these fun words. So it is a little bit more complicated. But it gives you, you can hedge your portfolio, etc. So 4 positions. If you're stock trader, you can have 2 long. I propose to have 2 long, 2 shorts, right? If you said, Vlad, I'm neutral, we're stuck in the range for the past 6 weeks. We're gonna, in the past 2 years, right? You can actually argue that, if you look at spiders in the past 2 years, it also didn't go anywhere, right? If you started Tradespoon subscription in, 2021, right, and you were just long all the time, you're probably just flat, right? You're probably just flat. So you have to, and that's the next step in evolution of the trading, right? Because we're all conditioned to have positive thoughts, and most people can only go long, right? For whatever reason, that's just how our brain is wired. We can buy shares, right? Nobody can sell short. What is sell short? How can you sell shares that you don't have, right? That just sounds like some kind of Ponzi scheme. So important. That's the next step, to try to kind of rewire your brain to think like a trader. And traders think, they don't care whether you go long or short, whether you're buying shares that you have, you're buying shares to have them, or you're selling shares that you don't have, right? Because you're just looking at the direction, right? And you follow the direction and you follow your opinion on the market. If your opinion on the market is that is going down, then you can sell short spiders. You don't have to always buy spiders, right? You can sell short. There are, for people who cannot do that, obviously there are, tools like SH, right? Inverse ETF. So if you don't like to sell short spiders, then, somebody was smart enough to build a business around that notion and just buy, you can buy SH, it's just inverse ETF, 1-to-1. Questions. How many days do you trade before earnings? Usually it's the day before and day after, right? So 9 out of 10 times it's one, I put on the trade, like in PayPal, the day before, and usually the last half an hour, last hour of the session. I put on a PayPal trade. In example of Disney, I was concerned that it's going to be volatile, and I was actually correct, right? So I did not do the options, but I did do the stock the next day as an example of how to hedge your portfolio, right? Because in my personal account, I actually was short. I had a short put on Disney, so I gave an example of how do you defend your position if it goes against you by getting into this inverse cover call, right? But that happened the next day, right, after Disney announcement, right? So, I had short 92 put, I sold 93, stock at 93, it went to 92, so okay, I closed it and closed my short put. So Scott, thank you for that question. Any other questions? So Elite allows you to enter your phone number, get message every time I trade. I trade earnings, so these are options. I trade options, right? If you're interested in option trading, I am trading spreads, option spreads on ETFs or sometimes on individual stocks. So I'm, bearish on IWM, and I've been trading around IWM. Same kind of idea. It's a $5 spread. If I can collect, 30% on my risk, right? If I invest, $5 and I can make $1.50, right? Then that's pretty good, right? Well, in this example, sorry, it's 30%, right? So if I invest $3.70 and I can make $1.30, roughly 33% return on the risk I'm taking, then that's pretty good. And we're getting close to actually getting out of IWM. So option spreads, iron condors, butterflies, cover calls. That's part of the Elite service. Stocks, right? A lot of people say, Vlad, you only trade in options or you only trade in stocks. That's not true. I trade both, right? I try to do both examples to make sure that we have different background for different traders, and you have examples of each one. Any questions about Elite subscription? Stock Forecast Toolbox, one of my favorite tools. It's very accurate and I keep promoting it. I mean, it's artificial intelligence, right? So in theory, if you follow earnings calls, somebody has to mention, every CEO mentions AI 50 times during press conference. I don't mention 50 times, but I try to mention at least daily basis. It is the future. It does help you trade. I don't think, we're reading Isaac Asimov now, science fiction. We're not at that point yet, right? We don't have artificial intelligence that learns on its own, right? Humans have to tell the models what data to train on, right? And what are the parameters, right? In the future, if you read Isaac Asimov, you know that in the future, AI will say, listen, you humans don't know what you're talking about. I will decide on what data to train and learn, and I will make my own decision. Like true artificial intelligence, right? We're not there yet, right? All these models, there's the humans, they're pressing the buttons and they tell the models, okay, AI, train on this data, train on that data, right? So it's still kind of, we're not there yet. You don't have to kind of, I know there's a lot of publicity that, AI could be dangerous and I could be, we're probably a few generations away from that. So very good tool, especially when volatility is range bound, right? As long as we're trading between 50 and 25, model is going to do a good job telling you that, listen, when we are at 408, you probably want to go long. When we are at 412, you probably want to go short, right? And you could see very clearly it's today, right? Market opened at 414, right? 414. Sorry, looking at the wrong chart. Model closed yesterday. We closed at 412, right? We're open at 4:30. Almost we were at 414 actually pre-market, right? So one can say, listen, model didn't do a good job, right? Why would it be open at 414? right? There were expectations, that inflation data is going to be better than expected. We did open 414, but the model was correct that this is a range. And whether we open at 414, 413, you're overpaying, right? You probably want to go short. And this is concept, even if it's day trading or if it's not a day trading, right? This is a pretty wide range, right? 1%. So if you're consistently saving, 0.5% on entry, right? Because you know that you don't want to buy at 412, you want to buy at 408, that adds up, right? That adds up, and people are making more money. One second. One second. So that's in the model. You can see basically even without the model, 408 is your key support for day trading for short term, right? Because that's where we were this week, the low for this week. So you can clearly see that 408 is where you want to go long, and it didn't see any momentum above 412, and that's kind of, it makes sense. So that is a very powerful model. Same thing, if you zoom out for 6 months on this model, it basically says for the months of May, right now, slightly bullish biased, but market neutral. If we get to 420, you probably want to go sell. If we reach this 404, 405 level, you probably want to buy, right? 50-day moving average, year-to-date high. So I agree with the model, and it's been correct. And remember, this is not something that's posted, on May 12th. This was posted on May 1st, right? On May 1st, model tells you 405 is where you want to buy, and 420 is where you want to sell, right? For this using long-term analysis. So that's stock forecast toolbox. I do like, if you don't need to see live performance, if you don't need to see live orders, positions, you kind of have your own trading plan, you're confident, you're disciplined, you know exactly how much to buy, when to sell, you just need trade ideas. We have active trader, weekly trader, and monthly trader, all based on AI models. Every day you're going to get a list of stocks that potentially can outperform the market, like MasterCard today. Long and short. It gives you suggested entry price, suggested exit price. Again, very important to keep in mind that if you are new to trading, I propose no more than 4 active positions at a time and maximum drawdown of 2.5%. All right, any questions about active trader, weekly trader, stock forecast toolbox, elite service? Okay. Right, so we reviewed some of the trade examples. So you clear SMS message. Let's see, and we have other services. Shadow trader, right? We have a premium portfolio. If you only want, options, then premium portfolio. If you only want stocks, okay, robo investor portfolio. If you want to follow my trades, but you don't want to be, you don't need stock forecast toolbox or any of these screeners, okay, then you have shadow trader. But for the most part, you need to decide: do you need, do you have a solid trading plan? If you have a solid trading plan that you know how to execute, and you just need trade ideas, okay, you have stock forecast toolbox, active trader, weekly trader, monthly trader. If you're not sure about when to enter, when to exit, if you haven't traded long enough, if you need some kind of mentoring, then I would consider elite service and follow these trades. All right, any other question? Human go through training exercises America. It has programmer. Sounds good, yes. If you want AI, you know, right, consider reading some of these, some of his books, right? Isaac Asimov. He has a lot of good books, you know, I, Robot, you know, Foundation, The Last Question. They're all great books, and you know, he predicted what's going to happen, you know, back in 70 years ago. All right. Scott, can you help trade stocks within price range, such as stock between $2 and $10? Unfortunately, I don't trade based on stock price, right? I know people do that. I'm not sure why, right? I don't know why. I mean, usually it's because of absolute value, right? But you know, if you buy in 10 shares of a $10 stock, well, you can buy one share of a $100 stock. It doesn't matter how many shares you buy, and what matters is percentage, right? So, and I, you know, Scott, you might have your own reasons, so I don't want to, but I'm just explaining my thought process. And that's actually been a common mistake, right? Common mistake is that I always want to buy 100 shares, or I always want to buy 20 shares. I don't care if it's $2 stock, $50 stock. It gets even worse if you trade in options, right? Because if you bought one contract of $2 stock and you bought one contract of $50 stock, obviously you're risking completely different amount, right? Even if the option price is the same, you think you risking, you know, $2 option, it's $200, but you know, 1% move on a $100 stock and 1% move on $2 stock, it's the different amount in option price, right? So you have different exposure, and it's the most common mistake, right? So you need to rewire yourself. If you think about absolute values, you need to rewire yourself to think about percentages, right? And always invest the same amount, right? You always on a $10,000, right? I propose on a $10,000 account, right? Not to risk 2.5% of account value per position, right? So average account is $10,000, right? 2.5% of $10,000 is $250. So you never risk more than $250. It doesn't matter if it's a $2 stock or $20 stock or a $100 stock. That's always what you risk. I understand if you trade in options and you have a small account, right? Then maybe certain stocks you just, you know, you can't afford. You know, if you open an account with $500, you probably don't want to trade spiders because one contract of spiders is $41,000, right? And 1% move, you know, $4, all of a sudden your entire account is wiped out, right? So that I understand, right? If you have a very small account, you only want stocks between $2 to $10 because you're buying options on them. But unfortunately, there's very few optionable stocks that are very liquid between $2 to $10, right? Very few. You know, I can probably count on them on my hands. So to answer your question, you know, but if you have other reasons that, you know, maybe I just don't know about them, which is fine. You know, I propose stock forecast toolbox, or you can be in elite circle. If you want my opinion on any stocks, I will never say, listen, don't trade this stock, because I believe you can trade anything. You can trade penny stocks, you can trade forex, you can trade futures on futures on futures, as long as you follow the simple rules, no more than 4 positions, and you never risk more than 2.5% of your account value per position. I don't care what you trade. You could be trading oranges and pork bellies. It doesn't matter to me. But you have to keep those rules intact. And unfortunately, when you trade in very volatile assets that are extremely leveraged, you know, you usually forget to follow those rules. Scott, let me know if I answer your question. Thank you, Kevin, for your thoughts. Oh, you knew Asimov. Oh, cool. Thank you, Kevin. Oh, Scott, yeah, models. I mean, stock forecast toolbox doesn't care about the price, right? It could be 10, it could be pennies. Keep in mind that if you are analyzing stock, like biotech stock, that's extremely volatile, that the volatility changes, or you trade illiquid stocks, right? 10,000 shares a day, 30. They're very easily manipulated, right? So model might be wrong more often than you prefer, right? Spiders model, model determines, this is actually AI model that reads the predictions that we have, we store in a database and assigns a grade. So spiders is A, right? If you look at stock, I don't know what, like, I think Pelletier, right? Pelletier is liquid, AI moves a lot, uh, right? And it shows, strong downtrend in Pelletier, right, for the next 10 days. So these stocks could be volatile, right? And it model has to adjust. It has to first adjust to earnings, right? That Pelletier just moved from 7 to 10, but it also volatility is very high, right? It can move 25% up and then 25% down, right? So you have to keep that in mind, right? That the model would have to adjust to this volatility. Every time Pelletier moves 25% up, 25% down, then the model has to follow and adjust, right? So something to keep in mind. Oh, that's cool, Kevin. Thank you for sharing. All right. Any other questions? Scott, Kevin, thank you for participating. Irene, thank you. Don, Jack, Jerry, any questions about subscription? Again, in terms of plan, I propose if you're in soft landing, if you answered 1, I would have 30%. If you said 2 and 3, I would have 50% of your portfolio in cash, because I think volatility will pick up during summer. And if you believe we're not trading in the bear market, that we will retest at least, 52-week lows, right? At least. So you need cash for that portfolio drawdown. I spent a lot of time explaining how to determine this, and 4 positions, 2.5% loss. These are some of the other rules that or guidelines and part of my trading plan that we cover during live trading room. You can look at them in terms of some of the psychology concepts and etc. etc. Any other questions? Prasad, thank you. Is this your first event? Thank you. Pelletier had very good earnings. Yes. Long-term position. Kevin, very good. Pelletier was a good, yes. Prasad, welcome. I'm glad you're here. If you have any questions, let me know. We do have chat now, right? You can schedule a call with our product specialist, right? You can schedule a consultation. We have live chat during market hours. What else do we have? And we have a lot of education, right? Webinar recordings. If you want to learn about options, right? Any options you want to learn about puts and calls. You go to event recordings, and we have different. You can search for different topics. Right? You can search options, right? Option or calls. Right, and you find all the different workshops on calls and puts. Thank you, Prasad. Everyone who's welcome, say hi in the chat. Prasad, I appreciate the feedback. Any other questions? Comments? And I covered all the services. I covered my opinion. I encourage you. We do have free newsletters, right? If you want to know 1, 2, or 3, right, on daily basis, you just go to market newsletters, right? I believe in education. A lot of people charge for this information. I don't, right? We don't. We believe that education is the most important, right? Trading is just like any skill, right? Just like if you want to be an MMA fighter, right? I mean, you could watch MMA all you want, but you're not going to be a fighter like MMA, right? Same thing, piano, right? You can listen how people play piano all you want, but without you practicing on daily basis or weekly basis at least, you're not going to learn how to play piano. Trading is the same thing, right? You're here because you do not want to give your money to, UBS or Fidelity to manage your own money, right? You're here because you want to do it yourself, because you think you can do better than professional money managers, right? Because they just want S&P return. You think you can beat S&P, right? That's an idea why you're here, right? Because if S&P returns is good enough, well, you just in your 401k just buy S&P, right? Or give your money to professional money managers and they'll give you S&P returns, right? If you want to do better than S&P, right, and you want to do better than most money managers that manage other people's money, then it's a skill, right? It's a skill. It requires time and practice, and that's why you want to invest into education. We do have one-on-one coaching program. You can consider that. I mean, that does cost money, right? One-on-one coaching program. Or if you're not ready to have financial commitment, then obviously we do have live trading room. We have YouTube channel, right? I forgot about YouTube channel. You can participate live, on YouTube. Speaking of, I believe in education because my mother is a piano teacher, my sister was math and physics teacher. I taught all my life. So Wednesday you can participate in the morning, but live training room, morning bell and closing bell. Please click on, if you haven't done that already, please click on subscribe. Participate live, click on subscribe, and if you find these videos are important, they help you, then share. All right. Would I change my view if the market takes out spiders on 420? No, I would not. Right. So the next level after 420, right? The question is, well, Vlad, you think it's 2, but what if it's 1? Right. So when are you going to change your mind? Very common questions. Very common questions. I don't like to change my opinion on daily basis. I don't like to change my opinion on weekly basis. Right. But I do like to change an opinion if data shows that my assumptions didn't work out the way I planned. So if we do break above 420 level, the next level is 430, August high. We do already have few stocks at August high like Microsoft, Apple, and Google. So 430, that's not, it's 5% from this level. I would not worry. I would not change my opinion. If we take out 430, if we trade above 430, right? If I see that the small cap stocks are above 200, right? If I see regional banks, right, at least above 70 level, right, then I would say yes, it's time to switch and become broad-based participation, right? Traditional bull market is led by small cap stocks. They're led by semiconductors, right? So as long as small caps are, I mean, semiconductors had a strong rally, but they're still way from 52-week high, not 52-week high, but all-time high. So as long as the small caps are not leading banks, right? Banks like Wells Fargo, right? I would need Wells Fargo to be, above 47.5 for me to change my mind, right? I need, what's some of the industrials, industrial stocks, right? I need industrial stocks to be, making new highs to break above 105, right? I need energy, right, to be above, at least 140, crude oil to be at least close to 100. Then yes, then we avoid in recession. I'm wrong. Okay, time to switch. But as long as we don't have a broad-based participation, as long as commodities are in downtrend, right? You look at steel, right? Some of these steel company stocks, they are falling off the cliff. Why? Well, people don't need steel, even though China is reopening, and even though we have an infrastructure bill that everybody is starting. But why are the prices of steel or oil are down? The only reason, because demand is down, and the only reason demand is down, well, because people are concerned about recession, companies concerned about recession and they don't want to spend. All right, thank you. Do you have education for robo-investor? Irene, we do have one-on-one training. I mean, we don't have education for specific service. We have videos. You can participate live, right, in live training room, but we don't have, you know, the only coaching we do have that I do encourage you to consider, where you can, you know, have one-on-one training, is this one-on-one coaching, right? You can apply. So I'll put it here. If you ready to make a financial commitment and have one, it's the same thing like if you want to learn how to play piano, right? I mean, can you do it on your own? Can you watch YouTube? Can you, you know, join Vlad at live training room and hear him play piano? Yes. Can you learn? Yes. Are you going to be really good at this? Probably, but it's going to take a lot more longer period of time, right? When you have one-on-one coach, whether you want to learn how to ski, play chess, play piano, you need one-on-one coach, right? You know, I'm paying, you know, $100 an hour, $50 an hour for all my kids to play, you know, English classes, music classes, piano classes. Like they're just every day they have classes. Why? I mean, can they do it on their own? Yes, they can. But I believe that, you know, if I give them a coach, you know, they're gonna play piano much better, or they're gonna know physics much better. And that's just reality, you know, that you cannot avoid, right? Okay. Trying to rebound, agree to the yield deadline. I mean, Kevin, yes, that ceiling is a problem, right? Copper prices, right? Kevin mentioned copper prices. I mean, copper is a kind of a bloodline of economy, right? Semiconductors is operating system, right? Copper is bloodline. You know, you can't, economy cannot grow without copper prices, and copper prices are, you know, you can see sitting on the key support. If we have another down week, you know, then we'll retest 52-week low very quickly. All right, that's all I have for today. Thank you very much. You guys were awesome. And I will see you. There's no closing bell today. For some of you are the closing, so there is no closing bell today. But I will see you Monday morning in a live trading room, some of you. Thank you very much and have a great day.